Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. It's Friday and thank God for it, but the markets at the moment are in complete defensive mode as far as prices are concerned. The Nifty right there in front of you on the screen at its day's low, 25,165 right there in front of you, and it is now about the lowest that it has seen in the month of July. So a 2-week low on the index, and I'll request the PCR to kindly fire the long-term chart of this 50 share barometer. What you see is 3 successive days of falls, and that's primarily because of the overhang that has come in from SEBI's very strict action against an algorithmic trader. It has impounded gains, allegedly illegal gains worth 4,840 crore rupees. It's hit sentiment in the Lal Street. Volumes in the options market have almost fallen dramatically, and it has also impacted cash markets as well. Last 3 days of losses on the Nifty, you see the index slipping from a high of 25,550 to where it is now 25,165. This price was last seen on 25th of June. So you have at least a 3-week low on the index, and earnings from TCS, which may have lifted sentiment on the Lal Street, have been very disappointing. So lots of negatives now camping gains as far as the broader indices are concerned, and this is also a good time to look at how they are shaping up as far as volumes are concerned. Apart from a few stocks where you have individual news-led events, you have massive selling pressure coming in. Look at Glenmark, 14% higher to a fresh high of 2,174 crore rupees. This is because the company has signed a $750 million pact with an American giant on an anti-cancer drug, which has the potential to make Glenmark earn somewhere like $1.23 billion over the medium term in developmental products. So 2174, the top traded counter on the National Stock Exchange, about 2,791 crores of Glenmark has already been traded, and we are still 1.5 hours away from the daily close, 11 times the 5-day average. Today on Glenmark, about 1.27 crore shares have been traded so far, and this is almost 11 times the 5-day average. As you can see, over the last 5-6 trading sessions, Glenmark has made successive higher highs and higher lows. Also in top form is Anand Rathi Wealth Management. The company declares its first quarter performance, where you had a 15% year-on rise in first quarter top line, and maybe a 20% rise in profit after tax to 94 crore rupees. So good gains there as well, 3.6% higher on Anand Rathi Wealth, and again volumes are 9 times the 5-day average. So if you remove the individual performances, the mood on the National Stock Exchange is of extreme bearishness. You have just 763 shares in the green compared with 1700 that are in the red. We track 19 indices for you, ladies and gentlemen. 17 are falling, and the 2 indices that are in the green point to a very defensive market. Nifty Pharma Index up 0.8%, Nifty FMCG Index led by Hindustan Unilever up 0.6%. Even in the widest index, which is the National Stock Exchange 500 share index, just 138 shares are in the green compared with 362 that are in the red. And the most impacted sector is the broking and the exchange setup. I'll request the PCR to kindly fire the chart of the Bombay Stock Exchange. 2388, this high flying stock till very recently was a market darling on the long side, and with this very strict action taken by SEBI, lots of profit booking has been happening from a record high. SEBI's order on Jane Street came on Thursday last, and you've seen the price erode from 2800 rupees to 2400 rupees almost. BSE has corrected from its June 10th highs of somewhere like 3030 rupees all the way down to 2390. So that's a very easy 2021 percentage point correction. Let me actually total that for you. Okay, at today's low, yes, it's down 22% from its all-time high. So that, ladies and gentlemen, signifies the extent of profit booking. At the same breath, look at how MCX has moved. All-time high was somewhere in the vicinity of 9,115. This is again a very, very high beta counter amongst the top stocks owned by mutual funds in the mid-cap space, and this is a correction of how much? 11% from its most recent all-time high. This is the kind of selling pressure that the markets are seeing, and on a net weekly basis, what you need to see is how index heavyweights have come under profit booking. Within Nifty, if you see the week to date performance, amongst top losers are Bharti Airtel, down 4.5% from a record high, now trading at 1918. You have TCS losing 4.4% at 3269. Earnings, as I have said in the early part of the commentary, were below expectations. As also you have a profit booking happening on Titan, 9% lower in the past week, 3374 for you. HCL Technologies, again the impact of TCS earnings has slipped 5.2% ahead of its earnings, 1635 for you. Tech Mahindra down 4.4%, 1581. So that's how the index heavyweights have moved. Amongst the very few gainers are Hindustan Unilever, again pointing to the defensive nature of the market, up 8% this week, 2525 for you. This is the highest since Hindustan Unilever has been over the last maybe 5-6 months, and this is how the stock is placed. In terms of pullers and draggers, stocks that are contributing to the Nifty's down move, they are led by TCS, pulling the Nifty lower by 32 points, Bharti Airtel putting a negative pressure of 31 points on the Nifty, HDFC Bank, Reliance and Infosys 21 and 26 points respectively, these five. What's helping the Nifty to make lesser losses is Hindustan Unilever. It's added 30 points to Nifty's overall tally, but since the advanced decline is just 13 to 37, you have more losers on the index compared with the gainers. Therefore, you have a negative number that's come on the index. Now, ladies and gentlemen, the start to first quarter earnings hasn't been particularly good. Therefore, you see this selling pressure today, and for the third day in a row, Nifty is down. It's broken below a sideways consolidating band, and given the lack of interest in the market in terms of either good first quarter performance or a complete absence of aggressive buying in the options market, you see traders being more comfortable booking profits on stocks that have run up sharply, or getting into the defensive part of the market, which is relatively cheaper, offers value, or pressing sales. So that's the overall sentiment on the Lal Street at the moment, ladies and gentlemen. This week was a write-off. If you see the Nifty on a 5-day performance basis, it's lost about a 1 percentage point. That is not good. We are starting the first quarter earnings on the back foot, and this comes after the Nifty has already risen to a 9-month high. It made a fresh 2025 high in the early part of July, and from then on profit booking has happened. So 25,600, ladies and gentlemen, 25,500 is a massive resistance, and let's hope that 25,000 holds. Let me just check the options picture. I've been watching that since morning. Let's see where you have a strong support. Please allow me a moment. At the moment, it looks like 25,100 is a strong support for the index. And then you have obviously 25,000, a round number where, let's look at the weekly picture. That's a little better. This time the July expires on 31st of July. So, you have the whole month. Okay. Even 25,000 is weakening. You have put unwinding happening at 25,000 and 2550 is also weakening, lots of puts getting unwound, and of course, selling pressure on the call side. So, that is how it is, ladies and gentlemen, as far as markets are concerned, completely defensive, money going into select pharma and FMCG counters. Look at Nestle. The FMCG index is something that needs to be watched. A lot of ETFs that track the Nifty FMCG index are amongst new highs, and the FMCG index today, ladies and gentlemen, has crossed the 200-day DMA. So, good moves coming in, and in the last 6 sessions, you have seen the FMCG index move from a low of 54,300 to a high of 55,800. So, it is a very, very steep move for the better in terms of value in the market, and it is appreciated about 4% in the last 3 months, 1 week or so. So, that is how it is, and this is also a very good time to see the Nifty Pharma index. These two indices are completely defensive in nature. The pharma index in the last maybe fortnight has appreciated from 21,400 all the way up to 22,300. So, it is a 900 point rally on the index. Let me see the percentage gains if I can tell you. And this is primarily driven by mid cap pharma. Yeah, 4.4% in the last 5 or 6 trading sessions. So, that is it. That is how it is, ladies and gentlemen. Sentiment on the back foot. People are now awaiting Jane Street to file its reply. Remember, it has 21 days to respond to SEBI's diktat in terms of the interim order that has come in, and its own work is blocked because SEBI has temporarily barred Jane Street from trading other than unwinding its existing positions. All those who followed Jane Street are on the sidelines because they do not know what SEBI's action means for the moment unless there is a legal decision, and that means that volumes have dried up in the options market. So, sellers abound, and they are just eating time value on Nifty options. We will leave it at that, ladies and gentlemen, and news continues on Business Today. Please continue watching.